ETFs are an incredible way to build wealth through the stock market. You can invest in them passively, you don't need much money to get started, and you can make safe investments even if you're not an expert in analyzing companies. It's no wonder why they've exploded in popularity in recent years, and in this video I'm going to go over everything you need to know about ETFs so you can start investing in them. If you find this video helpful, don't forget to toss it a like and subscribe to my channel for more videos like this one. ETF stands for Exchange Traded Fund, and it's a type of investment that trades on the stock market and represents a collection of different assets like stocks, bonds, commodities, etc. Investors can earn a return from ETFs in two ways, either through share price growth or through dividends, just like a stock. But buying ETFs are a bit different from buying individual stocks. When you buy stock, you own a piece of a single company. But if you buy an ETF, you have a small piece of many different companies and assets within that ETF. Think of it like going to a restaurant with a big group. If you all got your own meals, then you would eat a lot of one thing, kind of like investing in a single stock. But if you did it family style, then you would pay your share and get to taste a little bit of everything on the table, which is kind of like how ETFs work. Now there's two main categories of ETFs with a lot of different types within each category. The first category are actively managed ETFs. These are ETFs where there's a portfolio manager or team of professionals actively making decisions and trading the assets within the fund, with the goal of outperforming the overall market. I won't be talking about these much in this video because I wouldn't recommend these for beginners. Typically, ETFs in this category have higher fees since someone is actively managing it, and they're also usually less tax efficient since the manager is usually trading the underlying assets frequently. On the other hand, the second category of ETFs are passively managed ETFs. These ETFs aim to track the performance of an index or some other benchmark by replicating it. They're much less expensive to manage than actively managed funds. There's a ton of different types of passively managed ETFs out there that track different things. To name a few examples, index ETFs replicate stock indexes like the S&P 500, the NASDAQ, or even the entire stock market. Fixed income ETFs hold a collection of different bonds and other fixed income assets. There's commodity ETFs that hold commodities like gold or oil. And there's even industry-specific ETFs that hold the stocks of companies within a certain industry. Now, there's a lot of benefits to investing in ETFs, but the biggest one in my opinion is the instant diversification they can give you. If you invest in an index ETF like VOO that tracks the S&P 500, for example, it's like you've invested in every stock within the S&P 500, and that's way easier than buying the stocks of all 500 companies in the S&P 500. On top of that, it also allows you to invest without needing to be an expert in what you're investing in. Now, it's still important to do your research before investing money into the stock market, but let's say you want to invest in an industry like clean energy, but you don't know what companies to invest in. You could instead buy an ETF that tracks several clean energy companies and reap the benefits of the growth in the overall sector while reducing the risk you would otherwise take on by just investing in one company. Now, on top of the diversification, there's also no minimum investment required when investing in ETFs. If you use a broker that lets you buy fractional shares, you can put in as little or as much money as you want into an ETF, unlike traditional index funds that usually have a minimum investment of hundreds or thousands of dollars. And on top of that, like I mentioned before, passively managed ETFs also have relatively low management fees, usually below 1%, which means more of your returns stay in your pocket. All these things make ETFs perfect for people who are new to investing, don't have much money to invest with, and don't want to do much work to invest. Now, when looking into what ETFs you want to invest in, there's a few key things I want to make sure you look at when you do your research. The first is the volume of the ETF. Make sure the ETF you're buying is well traded and liquid so that when it comes time to sell, you won't have trouble doing so. And if you don't know what volume is or how to find the volume of an ETF, check out my video on how to read stocks where I go through that in more detail. Next, you want to check the expense ratio. This is the management fee you would pay to have this ETF be maintained for you. This shouldn't be any more than 1% and frankly should be lower than 0.2%. For example, VOO, which is one of the most popular ETFs that track the S&P 500, has an expense ratio of 0.03%. Next, you should check out the holdings of the ETF. Since these are publicly traded funds, it's usually easy to find what assets are in the ETF. So make sure the ETF is backed by strong assets and not just a bunch of junk. And lastly, make sure you watch out for commission fees from the broker you use. If you're investing in small amounts, you should be able to find a broker that doesn't charge commission fees when you buy or sell shares of an ETF. I recommend using a reputable one that has been around for a while, like Fidelity, Vanguard, Charles Schwab, or E-Trade, just to name a few. I personally use Fidelity, which I love because they support buying fractional shares. I can set up automatic deposits and investments, and I can automatically reinvest the dividends I get from the ETFs I invest in. So all in all, ETFs are an incredible investment vehicle for folks who are new to investing and want to start growing their wealth without doing much work. I have some videos planned about other passive investing strategies for beginners, so definitely subscribe so you know when those drop. And if you have any questions that I didn't go over here, let me know in the comments. But with that, thanks so much for watching. If you enjoyed this video, don't forget to smash that like button and smash that subscribe button to see more videos like this one.